Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what is FATCA, what is the Foreign Account Tax Compliance Act, why do you care, and how do you comply, right? Like FATCA, Foreign Account Tax Compliance Act. For U.S. persons, this presentation is focused toward individuals, U.S. entities, trusts, and estates that have to report, not foreign financial institutions that have their own requirement. From a tax perspective, FATCA came into effect in 2011 on the tax return, whereas U.S. persons have to include Form 8938 if they meet the threshold requirements for reporting. It's used to report specified foreign financial assets. It's different than the FBAR. The FBAR is another acronym thrown around a lot, Foreign Bank and Financial Account Reporting. The FBAR is covered under Title 31, which is Money and Finance, not 26, which is the Internal Revenue Code. An important aspect of that is that when you're filing the FBAR, you're filing that with FinCEN, even though the IRS does the enforcement with FATCA. You're filing it with the IRS. It's on Form 8938, and it's part of your tax return. If you're a U.S. person, you have to file it. U.S. citizen, legal permanent resident, foreign national who meets the substantial presence test. If it's a dual status return, you may have some reporting, and then depending on certain elections, you may have some reporting that may be exempt from FBAR, not necessarily exempt for the 8938 and FATCA. If you're a U.S. person, you live overseas, you still have to file it. It doesn't matter if you're a foreign resident, although the threshold requirements for filing will change. I've mentioned a few times already the way that U.S. persons comply is they file Form 8938. It's similar to the FBAR in that you're going to identify the maximum value of the asset, the accounts, things like that, identified on the form, included with your tax return, but other information is required as well. You have to include income associated or generated from the specific assets, income, dividend, royalties, capital gain, etc., etc. There's different threshold requirements in order to report under FATCA, depending on if you're filing in the U.S. or you're filing abroad, and depending on whether you're married filing jointly, single, or separate, will determine whether you have to meet the requirements or not. The threshold requirements start at $50,000 and go up to $600,000, just depending again on where you fall in terms of residence and marital status. What's a specified foreign financial asset? That's a common question, right? What do you have to report? So, accounts generally fall in there: stock, pension. Crypto is a big one people aren't sure about. To give you a little bit of information, the FBAR is handled by FinCEN. A notice came out recently, Notice 2020-2, in which FinCEN basically said, look, our goal is to require cryptocurrency accounts to be reported the same way that bank accounts are reported. So under that logic, chances are, if it's not already required, that cryptocurrency would be required on the Form 8938, depending if it's in a personal wallet, if it's on an exchange, if it's in a hybrid account, may determine whether you have to report and the extent of reporting, but chances are the IRS isn't going to let you slide and say that it's not an asset if it's in an account or being held in a fund or something along those lines. Another common question, of course, is, well, who's going to find me and what can the foreign financial institutions do about it? Here's typically how it works. Foreign financial institution has a bunch of reporting. They will report U.S. account holder information to the U.S. government so the IRS knows that you have it. This may lead to an FBAR audit. It may lead to a soft letter saying, hey, we don't see your 8938 as part of your tax return, or hey, it says here you've got 5 accounts. Well, we've got reporting from 7 institutions that show 19 accounts. What's the deal? What gives, right? It might lead to an eggshell or reverse eggshell audit in a situation in which the IRS has the information. You may not know they have it. You didn't include it on your tax return. You get hit with an audit. It may have nothing to do with the foreign accounts. They start asking whether you have a foreign account, and you solidify your misrepresentation by saying no, and then that turns into a special agent investigation. So you have to be careful. You may receive a certification letter from the foreign financial institution to ensure that you comply with FATCA, because the institutions have their own reporting requirements under FATCA and CRS, which is the Common Reporting Standard, and so they require U.S. account holders and other account holders outside of that particular jurisdiction under CRS to provide that information so that the institutions can stay in compliance. If you don't, Oftentimes they can freeze the money, they can close the account, so you got to be careful. If you're out of compliance with FATCA in prior years and you want to get into compliance, there's various amnesty programs you can use to do that. If you think you might have been willful or you can't certify under penalty of perjury that you're non-willful, there's the Voluntary Disclosure Program, VDP. It's used for both domestic and offshore ever since the IRS did away with OVDP, offshore voluntary disclosure, in the end of 2018. If you're non-willful, you have a lot more options available to you. You've got the streamlined filing and compliance procedures, streamlined domestic and offshore. You have reasonable cause and delinquency. We have lots of free information available on our different websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.